Hey everybody, today is January 18th, and today we're going to talk about the stock market. The stock market is once again falling, Dow down 494, S&P down 76, and the NASDAQ down the most, 2%, right? Down 340 points. And the question is, why is the stock market crashing again, right? Last week we saw a nice bounce over here, right? A nice bullish hammer reversal, but this ended up being faded over here. Weren't able to reclaim the previous all-time high, and basically we're rolling over again and testing the 100-day moving average again, right? We've already done it about 1, 2, 3, and now a fourth time, right? And this year we had one pullback. So the question is this going to hold or are we going to roll over? Before we begin this discussion, please read the disclaimer. You can pause this video as you read it. Okay. So the question is, why is the stock market consolidating for so long, right? Why do we keep going sideways instead of going up to new all-time highs? And of course, the answer is that right now the market is trying to digest the upcoming Fed tapering and also the interest rate hikes. People are still deciding how many interest rate hikes there are going to be. People, I think, can agree at least 3 interest rate hikes, right? But we've seen a lot of forecasts around 4 to even up to 7 or 8 interest rate hikes. I don't know if there's going to be like as much as 8 interest rate hikes, but the point is people are starting to agree that these interest rate hikes are going to actually happen this time, and it's going to have a significant effect on perhaps the market, right? But I think that if we look at the technicals, right, we can see that even though the market has been pulling back quite a bit, we are still technically in a uptrend, right? We're still in an uptrend. We're having trouble breaking through 470 resistance, right? We broke up here, but we got rejected again, right? So we sort of stuck at this resistance level. At the same time, we are making higher lows, right? So technically, we are in this sort of this ascending triangle pattern, which isn't the strongest, but it still is ascending triangle, right? We still have higher lows. So as long as we continue to find support on the 100-day, which is this gold line, right, and make higher lows, and right now we are going to see if we can close the day above or below this, and we'll have to see if tomorrow is going to continue down low or higher, right? But if we're able to hold this as support, if the S&P is able to bounce, this could end up being another higher low, right? Another higher low in this ascending triangle, which may break out higher, right? And we've seen ascending triangles in the past have done very well in helping us predict future breakouts, right over here. And see how this, once we broke above this resistance, we saw a nice break, and we never went down to retest that resistance level again, right? Same thing over here. Right now, here, kind of pushing up. Oops. Once we broke above this resistance level, right, kind of bounced, consolidated, and we basically just ripped up higher. And now we're sort of coming down again to retest this previous resistance level, support level, or resistance level, sorry, coming down to test that support. And if we're able to hold this, I think that we will see a nice breakout above 480, right, and then above breaking out towards 500 going into the end of the year, right? So I think that's what the market is trying to do, is trying to see if these interest rate hikes, these future tapering is going to affect the market. I think the bears are going to come in and try to test support, test the bulls, and see if they're going to defend this level, right? So as long as we defend these levels, defend the 100-day, as long as we continue to make higher lows, I think we have to give benefit of the doubt to the bulls and consider that we were going to have a bounce suit. However, I've said multiple times that I don't like to see the same support level getting tested over and over again. So the fact that we're coming down again, and the fact that we had this failed breakout rally over here, we instead rolled over and we're coming down, and it seems like we're going to close a strong red body candle at or below the midterm moving average, the 100-day moving average, right, the gold line. There is a increased probability that we will continue to see the price come down to test the long-term moving average, which is this blue line, which we haven't tested in a while, right? Really since the pandemic crashed the market. So if we do come down, this should act as strong support, this blue line, right? If the market does come down this low. If it does do that, it will definitely break all this market structure. But keep in mind that when the market pulls back like this, we will see this line go up further, right? And by the time this pulls back to touch the blue line, perhaps the blue line will have gone up a lot higher, and that will bring the price of the S&P down to perhaps the previous high, right, around 450, which is also the previous resistance level here. So see how these things kind of line up on a technical level? So we could see a pullback in the blue line. We can see the price come down, test the previous resistance level around here, but also as the moving averages comes up, we'll see it bounce off, at the same time, right? So we have these confluence of two support levels, potential support levels, right, at 450 and also this blue line as it comes up to 450. So I think that could be a next strong bounce if we fail to hold this level. If we break below our short-term, medium-term support levels and we break this trend of higher lows, right? But as of now, we should give benefit of doubts as long as we are able to hold this level, right? As long as we're able to hold at least 100-day and at least 450, right? As long as we're able to hold these two levels, we should give benefit out to the bulls that we will continue to bounce higher, right? But of course, the blue line is the support level to watch if indeed we do break this support level down to a lower level, right? So I do think that the blue level will hold. But yeah, for now, there's a lot more fear coming back into the market. But keep in mind, like I said, every time, as I said in previous posts, every time this is the fear index, VIX Volatility Index, which also measures the fear in the market. Every time we have a gap up, right? We have a gap up, the market usually fades the gap in volatility, right? We have a gap up here, it gets faded very quickly within the next two sessions, right? Gap here, faded. And of course, we had a gap most recently, December. We talked about this gap. I remember talking about it in the video. We got faded that one. So right now we have a gap here, right? We have a gap right here. I believe this will get faded soon. So within this week, perhaps, this is Tuesday, right? We had a holiday yesterday on Monday, Martin Luther King Jr. Holiday. So I believe this will get faded. This gap will get faded. We'll fill this gap, and then we'll see the volatility come down. Like this is probably like, oh, it's a new week. People trying to, of course, take their profits ahead of potential volatility in the future regarding tapering and interest rate hikes when those things eventually do happen. But right now it's just talks, and we haven't really have any clear schedule of when that exactly will happen. We're gonna have to wait and see what the Federal Reserve says about that. But just to summarize again, the stock market is trying to, this S&P 500 right now, right? This is a SPY S&P 500 index is trying to find support on the 100-day moving average, which has found support in our last 2 months, right? Over here, here, and here. And so if we're able to hold this, we'll essentially have higher lows continuation, and we should see a bounce to the upside, right? But if we break this level, we want to see at least, we want to see 450 hold at first, right? Which is our lowest higher low over here back in early December. If we don't see this level hold, it will likely come down to this blue line, which is the 200-day moving average. And this should hold unless there's like some really bad news or something, right? But that's getting a little ahead of ourselves. We'll have to wait to see how the situation is and reassess then if we do end up breaking below the 200-day. But for now, our support levels, of course, the 100-day, 450, which is this around here, and of course the 200-day moving average if we do break below. So definitely we'll update you and see how the price action develops if we do bounce and hold the 100-day, or if we lose the 100-day and we go down to 200-day. So I'll update you on the next video and see what happens. Thank you for watching this video. If you found it useful, helpful, informative, please like this video, leave a comment below, and subscribe for updates. Appreciate all your support. Thank you again, and have a great day.